Hello, I'm James Preston and welcome to the ASX at Breakfast exclusive to Kalkine TV, where we provide you with all the information you'll need for a successful day of trading. Australian shares are set to open lower on Friday following a disappointing overnight session on Wall Street. On the other hand, investors weighed the risk of higher and longer interest rate hikes by US Federal Reserve to tame rising inflation. The latest SPI futures indicate that the ASX 200 is set to open 38 points or 0.55% lower. On Thursday, the benchmark index closed 0.2% higher at 6,842.9 points. The latest economic data out of the US showed that US retail sales unexpectedly rebounded in August, and separately, the Labor Department said that initial claims for state unemployment benefits fell for the week ending on September 10 to the lowest level since the end of May. On Wall Street, the Dow Jones fell by 0.55%, the S&P 500 dipped by 1.1%, and the Nasdaq ended 1.4% lower. In Europe, the Stoxx 50 fell by 0.7%, London's FTSE gained 0.1%, the CAC dipped 1%, and the DAX ended 0.6% lower. MSCI's gauge of stocks across the globe shed 0.96%. As for Asian markets, performance was mixed. Japan's Nikkei gained 0.21%, Hong Kong's Hang Seng experienced a boost of 0.44%, whilst China's Shanghai Composite dropped by 1.16%. Alright, time now for a very quick break here on the ASX at Breakfast before we take a look at the Aussie dollar, oil, gold and the world of crypto. If you're looking to keep abreast of the biggest stories from the crypto world, the fate of exchanges and crypto hedge funds during the ongoing bear market, and you're wanting to keep up to date with the best and worst performers in the altcoin space and that of flagship currencies such as Bitcoin and Ethereum, then Kalkine Media's daily crypto catch is absolutely essential viewing for you. Tune in each afternoon right here on Kalkine Media to get the latest scoop from Anchor to ZeroCoin. Welcome back to the ASX at Breakfast on Kalkine TV, where we give you all the information you'll need for a successful day of trading. One Aussie dollar is currently buying 66.89 US cents, down from Tuesday's intra-week high of 69.14 US cents. Treasury yields surged with the two-year yields hitting fresh 15-year highs after the release of the latest data on retail sales and jobless claims. The benchmark 10-year notes rose by 4.5 basis points to 3.457% from 3.412% late on Wednesday. Also, the US dollar index rose 0.091%, whilst the euro gained 0.18% to 99.95 US cents. Moving on, and oil prices have fallen. On Thursday, the oil prices declined by 3% on the back of expectations of weaker global demand and continued US dollar strengthening ahead of a potentially large interest rate rise. Brent futures declined 3.5% to settle at $90.84 a barrel, and WTI crude finished at 3.8% lower to trade at $85.10 a barrel. Much like oil, gold prices also dipped. Gold fell to its lowest level since April 2021, hurt by an elevated US Treasury yield and a firm dollar, as bets of another hefty federal interest rate hike weakened bullion's appeal. Spot gold dropped 1.9% to trade at $1,664 and 46 cents an ounce, and US gold futures fell by 2.02% to trade at $1,662 and 30 cents an ounce. Meanwhile, iron ore futures rose on Thursday, with the Dalian benchmark hitting its highest point in more than 2 weeks, buoyed by China's intensified efforts to support the ailing domestic property sector. The most traded January iron ore on China's Dalian Commodity Exchange closed by 0.7% higher at 722.5 yuan or $103 and 66 cents a tonne. And lastly, in the past 24 hours, the global crypto market cap has been decimated, falling by 4.21% to be valued at approximately $959.48 billion US dollars. Importantly, Bitcoin has once more fallen below the 20k threshold and is sitting at around $19.7 thousand, but has still seen a weekly increase of around 2%. Well, that's all for this edition of the ASX at Breakfast. Have a great day trading and make sure to keep it locked here on Kalkine TV for the latest market insights and business news. I'm James, signing off for now.